I think that ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created. And something like 99.7% of the benefit was for the people that didn't own the ETF.
Michael Saylor begins by discussing Bitcoin ETFs exchange-traded funds as a significant application of Bitcoin. He explains that the recent inflow of assets into Bitcoin ETFs has substantially boosted Bitcoin's price. For instance, a mere 1% increase in Bitcoin investment through ETFs drove the price up by $20,000 per coin. This increase created around $200 billion in market cap, with the vast majority of benefits accruing to those who did not own the ETFs. Essentially, the ETF investors who bought in at $40,000 pushed the price to $60,000, indirectly enriching the entire Bitcoin network. Saylor argues that many people make investment decisions based on recommendations from others rather than their own understanding. This is particularly risky in the non-Bitcoin world, where the complexity and number of available investment options are overwhelming. Unlike traditional stocks, Bitcoin represents a singular, revolutionary asset class. Once one understands digital money, the strategy becomes straightforward. Buy Bitcoin, keep buying Bitcoin, and don't sell unless absolutely necessary.
I think that ETFs are just another application of Bitcoin, and there are thousands and thousands of applications coming. So in this particular case, 1% of Bitcoin, 1% more assets kind of flowed into the ETFs. It boosted the price of Bitcoin in the last 2 months by $20,000 a coin. And that means that 99% of the $200 billion of market cap got created. And something like 99.7% of the benefit was for the people that didn't own the ETF. If you think about it, yeah. And once you do the math, the ETF people bought in at 40,000 and drove the price to 60,000 and have 1%, and everybody else had the other 99% and their Bitcoin is worth 60,000. So in this particular case, if that's taking over Bitcoin by basically making all the people that don't use ETFs $200 billion richer, right? Then you probably want that to happen 100 more times. You'll see other apps. At some point, an insurance company will build Bitcoin into an insurance policy. And then companies will build Bitcoin into their balance sheet. And then a country, and if a country that you don't like buys 1% of the Bitcoin supply and drives up the price by a factor of 2, it'll be another example of every other country getting 99% of the benefit. So as people embrace the Bitcoin network, and as they build applications on it, and as they invest in it, it's impossible for them to take it over, because the network outside of the new actor is actually getting more powerful at a faster rate, and it actually empowered the non-ETF holders 100x more than it empowered the ETF holders. So it's not a fear I have. I think that every single new participant just makes the entire network better and more successful, and empowers every other type of Bitcoiner. The lesson of Bitcoin is the best asset. There is no second best asset. Buy Bitcoin. Keep buying Bitcoin. Don't sell the Bitcoin. The truth is, other people with either less information or less awareness, if someone studies Bitcoin for an hour, then they will watch the news for 1,000 days, and they will have 87 moments of anxiety during which they'll sell the Bitcoin. Mm-hmm. And so Bitcoin has a lot of those people. Like, they heard someone say buy it, and then they buy it, but If you would buy it because someone said it's a good idea, then you would sell it because someone said it was a bad idea, because you're not making your own decision. You're basically reacting to the crowd or sentiment or emotion. So a lot of people make investments based upon a recommendation from somebody else. And in the non-Bitcoin world, that's almost essential, because there's 10,000 stocks. Most people don't study. How many people spend 100 hours studying each of the S&P 500 stocks? Nobody. Okay, so if you own one of them, how many people spend 100 hours studying one stock that they own? 98% of people don't spend 100 hours studying the one stock. The stock analyst, the person that covers Apple, they spend 100 hours, and everybody else kind of outsources the thinking to that person and says the analyst put a buy rating on it, so I'll go ahead and take their recommendation, I'll buy the stock. And when the analyst puts a sell rating on it, they sell the stock. And that's understandable in the 20th century economy, because in a world where you have to sift through 100,000 different investment ideas to figure out what to buy and sell, you can't possibly do it. A dentist doesn't have the time to sift through 100,000 things. Okay, why do you have to sift through 100,000 different things in order to actually avoid losing all your money? And that's because the money's broken. Okay, so in a world where the money is broken, where there isn't a money where you can just buy the money and wait forever and have it go up, in that world, you're an investor and you're running your own hedge fund. And of course, most people don't have the time to run their own hedge fund, so they're the worst of all worlds. They're taking the risk of a hedge fund, but they're not putting the effort in to run a hedge fund. And even if they did, I mean, how many 65-year-old retirees, have the ability to do stock analysis on 500 different stocks? Like, I would argue almost none of them. So in this particular case, Bitcoin is a new asset class. It's digital money. Once you understand it's digital money, and you probably get there somewhere between 100 hours and 1,000 hours. Once you understand it's digital money, then you realize that the strategy is you just buy it and keep buying it, and don't sell it until you have to pay a medical bill, or until it's an urgent life or death matter where you just have to sell it. But otherwise, you just keep accumulating, and you wait for all of the chaos and entropy and inefficiency and disorder that undermines every other asset to take hold. The longer the time goes on, the more difficult and the more disorder there is, and the more people appreciate the value of good money. So I wasn't bothered by the volatility. I was just waiting, for nature to right itself. Mm-hmm. And I think that the biggest mistake you can make is become insecure. Is it money? Is it not money? Right? Once you've made your decision, you're committed, then you're just thinking, if the price is low, that means I get to buy more.
Saylor describes Bitcoin as a revolutionary economic protocol that represents a departure from thousands of years of defective monetary systems. Traditional economic systems, based on fiat money, are fundamentally flawed due to their susceptibility to inflation and central control. Bitcoin, as a digital, decentralized form of money, introduces a paradigm shift. It offers a form of sound money that has not been seen in recorded history. Transitioning to a new economic protocol like Bitcoin involves overcoming entrenched systems and mindsets. Existing institutions, laws, and educational frameworks are built around the fiat money system. Saylor acknowledges that it takes time for society to adopt and understand a new, superior form of money. This generational shift is necessary for Bitcoin to be fully integrated and appreciated.
The old protocol is embedded in everything. It's embedded in the accounting, it's embedded in the law, it's embedded in... everybody spent 30 years of their life learning it. And so people struggle with new protocols. And so if I come up with a new protocol which is an order of magnitude better, or 2 orders of magnitude better, right? You have to migrate the institutions, the governments, the individuals, and oftentimes you have to have a generational shift. Bitcoin represents a new economic protocol, a new monetary protocol. So you have 5,000 years of recorded history during which humanity has functioned with defective money. And you didn't, and every book on economics, by whether it was an Austrian economist or whether it was a fiat economist or any kind of economist or political economist or the like, every single book was written in a world where the money was mathematically defective. And it's impossible for you to appreciate the theoretical sound money or proper money until you've seen an example of one, right? You have to see one clean money. The Austrians, the only model they had was gold, but we knew that, but you couldn't make the argument in favor of perfected money using gold as an example, because gold actually suffered or created hyperinflation in Spain, you know, in the 16th century. So someone could say, well, look, even in the gold standard, they had hyperinflation. So I guess gold's not perfect, so then my paper money is okay. So I think after 5,000 years of the billions of people all writing about politics and economics based upon defective money, it's not surprising that it takes more than 15 years from the first theoretical establishment of proper money before people start to absorb the idea of clean, sound money, right? I mean, like there's not a single PhD economist that actually went to school in the era of perfected money.
Saylor suggests that while the transition to Bitcoin might be slow, it is inevitable. As more people and institutions recognize the inefficiencies and risks associated with fiat money, the adoption of Bitcoin will accelerate. This shift is not just about technology, but also about a fundamental change in how we perceive and utilize money. Bitcoin, with its inherent properties of decentralization, limited supply, and security, is poised to become the backbone of a new economic era. Michael Saylor provides a compelling vision for Bitcoin's future. He highlights the transformative potential of Bitcoin ETFs, the exponential benefits of network effects, and the importance of deep understanding for long-term investment. Saylor's insights underscore that Bitcoin is not just an asset, but a revolutionary economic protocol set to redefine the global financial landscape. Please like and subscribe my channel.